Next guest joins us live from the event. Ahead of our big interview, Harsh Kumar from Piper Sandler has a $175 price target buy rating on the stock. Harsh, the big headline seems to be the CapEx, right? The $1 trillion of CapEx spending on data centers by 2028. Was that your takeaway?
Yes. So the company is incredibly well positioned. If you look at the history of companies, there have been extremely few companies that are as well positioned as Nvidia. They're addressing some of the most tremendous high growth end markets, such as data centers, such as robotics, such as autonomous driving, and each of these can be a multi-$100 billion opportunity. But yes, specifically within data center, it's entirely possible that you can get up to $1 trillion each year of annual CapEx spend. We're already several $100 billion. And, famously, Microsoft is $80-something billion, and others are following. And these guys are not slowing down. And so we can certainly see that cadence continuing to several $100 billion, going up to $1 trillion, somewhere around that time frame of 2028.
So what happens to your estimates at this point? And why do you think the stock didn't react more? Is it just not trading on company fundamentals right now?
So we're at a point in time where we're caught between the macro and potential calls of slowdown and all the stuff associated with tariffs. It's causing a little bit of uncertainty. There is an argument that is being made that the CapEx growth has stalled just because the CapEx numbers have gotten so big. But I think it's a little bit misplaced. I think we are only looking at the data center market at this point in time. When I was talking to Jensen, for example, and other folks at Nvidia, it was very evident to me that the next step on the horizon is possibly software. And software could be $1 trillion market for this company as well. You have the AI Enterprise Suite, which is generating a couple of $1 billion, which will continue to grow. Autonomous driving potentially coming on by the end of the decade. We think Mercedes-Benz alone could be a $5 billion revenue number. And now you've got GM on top of that. And then you have robots. And the training of robots is incredibly complex. And it will require much more amount of compute, just as reasoning does. So we expect compute to go up, exponentially in the future.
Harsh, you mentioned that the companies investing in this CapEx, the customers of Nvidia, are not slowing down. They're not slowing down this year. I guess the question is, how firm is that $1 trillion number a few years out? If we went back 3 years, would we have nailed this year's CapEx number, is I guess my point. And what are the constraints on that, whether it is the spending power or, the electrical grid, anything like that?
Yeah, so I would put it this way. I would put it in the context of longevity and say to you, this is an incredibly well-positioned company. Whether the $1 trillion CapEx number comes in 28 or it comes in 29 really doesn't matter. Because if you look at the end markets of the company, data center is really the big end market that the company sort of got into after gaming, which was a limited end market. But data center is huge by itself. We're talking trillions of dollars of investments down the line. And then you've got autonomous driving, you've got Omniverse, you've got software, you've got robotics, which is the ultimate end market. So I can see a decade-long cadence of solid investment by the end markets of this particular company, Nvidia, into, that makes Nvidia thrive in the future. So I wouldn't get so much fixated on 2028 versus 2029. The pathway is up.
Harsh, thank you very much, Harsh. Appreciate the first take on Nvidia. Harsh Kumar,
Thank you.
Piper Sandler.
All right.